Thought we had a great discussion. Emma, who comes from the FCM side of the business, brought a perspective from the clearing firm point of view. So those that service our end customers, that bring the risk and put it into our clearinghouse and intermediate so much of that risk. That's a critical part of how CCPs work. Mike from Flow brought a great perspective from the liquidity provider point of view. We had a conversation just after the panel. He's excited about kind of following on some of the topics we discussed and where they can feel a better strategic alignment with us as an exchange partner, not just an exchange service provider. Chris from ICE and Eric from Eurex, I think we shared a lot of similar kind of thoughts, but slightly different perspectives on what grows markets, what challenges markets, how we think about product development. As I mentioned, we spent a lot of time talking about product development through the lens of client need. So what's not working for you? What's an unhedgeable risk in your market? And I thought a lot of that came out today, and I particularly enjoyed the conversation around technology and how this market needs to evolve. It doesn't need to be blown up and started from scratch, but we do need to evolve. Technology can be a lever of that technology evolution, but I think we're all trying to figure out how best to serve our customer need. Our non-U.S. business continues to go from strength to strength. We set yet again another all-time record for volume in 2022 on the back of a volatile year. Our European, particularly our LATAM business, continues to go from strength to strength. We set another record in the first quarter of this year alongside options. And so we just continue to see, as we serve global customer demand, we're seeing increasing levels of client penetration into Europe and into Asia. I'd probably say we're about middle innings of client penetration in Europe and probably still early innings in Asia. And that's even kind of taking China and India, which are historically semi or mostly closed markets, kind of off the table. There's still a lot of growth left that we think we can unleash, and customers that we can provide efficiencies to in APAC, in LATAM, because customers are looking for benchmark liquidity in electronic markets 23 and a half hours a day. That's what we do and do very, very well. Not only is our non-U.S. business growing well, but options outside of U.S. is growing even more quickly than futures. And we think that's a natural evolution towards more sophisticated hedging strategies. And even those that are looking to expose themselves to markets are finding options are a great tool to be able to do that. So our sales team are having a really successful time engaging customers, educating them on options, how to use these sophisticated hedging tools to be able to expand and create more sophisticated hedging portfolios. We've been on a 10-year journey of investing in CME Group as if we were the largest options exchange in the world, because we are. We're the most diversified market. We've got deep liquid electronic pools of liquidity in everything from fixed income, equities, FX, all the way out to energy, ags, metals, becoming increasingly important, flexible tools for customers that are trying to manage risk and what are some pretty unprecedented levels of volatility. You go through 2022 on the heels of the COVID-impacted markets from 2020. You look at the Ukraine war and what that did to the energy markets, what it did to the base metals market and the gold market, not to mention fixed income markets and FX markets. We're seeing that options are just a continued growth engine for us. We're also spending a lot of time electronifying the ability to trade complex multi-leg spread options electronically on the box. That's been hard to do. So much of the multi-legged strategy trading used to be done on a trading floor. We no longer have options trading floors, with the exception of SOFR options. And so we've needed to adapt our technology to enable customers to seek execution, liquidity on screen at any time of the day. And so we've done a lot of technology investment to enable that. And also we feel that so much of the education tools that we've rolled out on our website and through our channel partners is helping customers migrate through an uncertain regulatory landscape and an uncertain market landscape, and options are really purpose-built for markets like this. We're seeing growth from emerging markets trading our benchmark products. So they're trading WTI, if they're trading crude oil, they're trading Henry Hub natural gas, they're trading our S&P 500. The nature of markets is, and I spent 16 years of my career as an interbank market maker before this, so I look at this through the lens of the customer. Customers want to be in pools of liquidity where they know they can get access into and out of positions at any point in the day. So our growth has been non-U.S. participants trading our benchmark products in their local trading hours. And so we're seeing that options growth. I think options year to date are up 24%, with the overall franchise being up about 2%. So options continues to be an outsized growth driver for us. And we're also seeing what's really interesting globally, buy-side clients are the fastest growing client segment trading options over the course of this year to date so far, in what's already been a volatile first 6 months.